this is a quote from the documentary entitled Titans, The Rise of Wall Street. Before J.P. Morgan became the king of Wall Street, he was just a young banker looking to make his name. J.P. Morgan trained under his father, Julius Morgan, one of the most prominent American bankers in London. So he wasn't exactly just a young banker looking to make his name, was he? He was actually the son of the most prominent American bankers in London. So they are lying and misleading you with this documentary. And what they're saying here is that there was a code of ethics that originates from the London banking houses. They were the honest people with integrity, the bankers from England and London. And J.P. Morgan's father was one of those people of integrity. He was one of those bankers of integrity. And he raised and he groomed and he taught his son everything he knew. And then he turned them loose in America, and J.P. Morgan went bad in America. So this is the English government relieving themselves of any wrongdoing whatsoever. So from here, the documentary goes forward in that he buys broken rifles from the United States government, he repairs them, and then he sells them back to the United States government at a 100% profit. He doubles his money. Okay, this is notes on Titans, The Rise of Wall Street, 2022. It's a documentary on Prime Video, and they start off discussing J.P. Morgan was a young banker looking to make his name, and he was sent overseas to Wall Street by his father. And Wall Street was like the Wild West. There was very little government oversight or government regulations, and the good people of Wall Street wanted to do the right thing, but also wanted to do it their way. And J.P. Morgan saw the very little regulation of Wall Street, and even though his dad had warned him, be a very good boy, be a very good banker, full of ethics and morals, J.P. Morgan grew weary of his father's rules, and he decided to go out on a limb and do things his way. Okay, so J.P. Morgan's first move is called the Hall Carbine deal. And he gets advice from another banker that says buy a bunch of rifles from the United States government that are obsolete. They use the word obsolete. And then modify them, correct the barrel. They'll repair the rifles and then sell it back to the U.S. government for a profit. And they will double their money. So at this time, the United States government is fighting in the Civil War. So they say that the Hall Carbine affair went into the news, and it gave J.P. Morgan some very bad publicity. I think they brought him to court or to some hearings, but the U.S. government eventually dropped all the charges. Next, they say that the government was going broke due to the Civil War, so they decided to sell bonds or war bonds. That is how the government borrows money. So they issue bonds hoping that you will hold on to it for 10 or 20 years, and at that time they'll pay you back with interest. So banker Jay Cooke has a revolutionary idea. Since the banks will not buy the war bonds from the government, he decides to sell them directly to the American people. The banks knew that at that point they did not know who would win the war, the North or the South. So why on earth would they support the North? These banks. So that tells you a lot about the banks. The banks as a corporation, they really don't care who wins the war between slavery and anti-slavery. They really don't care. But the American people does care, and they'll support their government if they think their government is doing the right thing. So Jay Cooke decides, hey, the banks are not going to take this risk and loan money to the North, even though that they're fighting slavery, but the American people will. So if the American people lose their money, he doesn't care. That's a good business maneuver. And he begins to put advertisements in all the different newspapers for American patriots to buy government bonds to support the North. So Jay Cooke is called a master salesman. Next, they described railroads. Railroads were going across the United States. There were different railroad lines that were between different, major cities. They were called like the Ohio Railroad, the Pennsylvania Railroad. There are different railroad lines. So Jay Cooke wants to build a railroad that runs across the northern part of America. I guess going through the Great Lakes region all the way to the state of Washington. So Jay Cooke decided to employ all the same techniques and tactics that he did when he was selling war bonds to all the Americans that trusted him and bought his war bonds. But then, when railroads became real popular, there was a huge railroad boom. Nobody in America would want to invest in another one of Jay Cooke's crazy ideas. They just laughed him out of the marketplace. They wanted no part of it. So he had to bring his idea all the way to London. In other words, the people that create this documentary are misleading you. They are lying to you. This is the establishment media selling you some more bull about American history. When you hear about railroad magnates, railroad tycoons, all these rich people that made their money in railroads, it definitely was not the American people. Of course, Jay Cooke did not want to sell bonds to Americans because that would make them very rich. Instead, he wants what's called the railroad magnates and the railroad tycoons to make their money. So he had to bring his idea all the way to London, all the way to the English bankers, and get the English bankers to buy stock in his crazy railroad idea, who knew the difference between risky investments, like with the American Civil War, that they didn't want to get involved in. But when it comes to railroads, they'll take that risky bet. So when Jay Cooke went to London to try to sell bonds in his railroad, at first he must have sold a lot of them. And then it said that J.P. Morgan, with all his control in London, planted stories in newspapers that Jay Cooke's railroad idea would go bankrupt. And there was so much bad press in England that they proposed a ban on buying Jay Cooke's stock in his railroad company. In other words, they didn't want a lot of people investing in Jay Cooke's railroad company. It was such a good idea that the top bankers in England wanted to cut everybody else out of it. They said it's a stupid idea, it's going to go bankrupt. Nobody else invests in that railroad idea. So when Jay Cooke went to England to try to raise money for his railroads, there was J.P. Morgan wanting to cut out everybody out of the deal but him. They put in the newspapers that it was a bad deal. Jay Cooke's railroad empire was going to go bankrupt. Nobody should invest in Jay Cooke's railroad empire. And then J.P. Morgan was the only person that wanted to do that, because J.P. Morgan and his family probably owned the newspapers in London that wrote that. And that's how they control the financial markets, by putting in fake information whenever needed. So now we're going to fast forward to when the U.S. government issues more bonds. They want to borrow more money. I guess at that point, with the Civil War out of the way, J.P. Morgan and Jay Cooke decide to buy the bonds. Jay Cooke buys half, and J.P. Morgan takes over the other half. So these people are agents of England. J.P. Morgan is an agent of England. And the only name that they're giving us is that his dad worked for Peabody, but was ripped off by Peabody. But somehow J.P. Morgan controls London. So J.P. Morgan is probably a name chosen. The Morgan name is probably a name chosen to obscure who they are really related to, which are the most wealthy families in England. So before Jay Cooke could not convince the different banking houses to finance the United States government in their war against the South. But once the war is out of the way, Of course, they'll buy more bonds issued by the United States government. They'll loan them more money and own the United States government. The United States government will now be indebted to them. So they issue a ton more United States Treasury bonds, and JP Morgan buys half, and Jay Cooke buys half. So remember how they said that JP Morgan's father was the voice of ethics and reason. Listen to what JP Morgan's father tells him through this letter here. I quote, "I hope this letter finds you well. I wish to pass on my congratulations for securing half of the government's debt offering. However, I am disappointed to see that the Morgan name is listed after Cooke's." Okay, so that guy is saying that I am upset that we don't own 100% of the United States Treasury debt. We're sharing that with one other banker. So that's not exactly the voice of reason. And I'm sure they may say they're American or they had property in both America and England, because it looks better for Americans to be taking over all this debt that is owed by the United States government and not an English person, because that would mean that the English are taking back control of America through the United States government's debt. So this is a quote from the documentary. For Jay Cooke, the humiliating defeat is devastating. As his cash flow crisis is exposed, Cooke's depositors begin a run on the bank, depleting his already dwindling reserves and quickly throwing the house of Jay Cooke into bankruptcy. Okay, that is meant to confuse you. What does that mean? Jay Cooke's depositors began a run on his bank, throwing him into bankruptcy. What does that mean? It means that everybody that he sold bonds to wants to sell the bonds back. They want to cash in on those bonds. So they go to his bank and they say, give us our money that these bonds are worth. And guess who those people are? Those are people like JP Morgan and other rich bankers from England. And what they do is they professionally attack all the competition. All the other bankers they go after. And JP Morgan is a little pit bull. He's a pit bull owned by England. The aristocrats in England own JP Morgan, and they have sicked their little pit bull on America. So who was doing the run on Jay Cooke's bank? The JP Morgan people. All right, the quote from the documentary is, Cooke's collapse sends shockwaves across Wall Street that are soon felt nationwide. The bankruptcy of Jay Cooke and Company hit the financial markets like a thunderbolt. It was just a huge shock, and it was a shock to Jay Cooke himself. They state that Jay Cooke's banking houses collapse sent shockwaves across Wall Street and across the American economy. And then they show a room with a bunch of people waving pieces of paper in the air while shouting. So that represents the American people who bought these bonds, who bought stocks, and they have realized that their bonds, their stocks are now worth nothing. They're worth $0. They paid $10 per share. They bought 1,000 shares each, and now those shares are worth nothing each. Or they're going so low, they want to sell their stock to get what little they can, because the stock price is going down all the way to nothing. And that is started, of course, when bankers like JP Morgan that own most of the shares sell first. They own most of the shares in Jay Cooke's bank. They sell first, and that makes all the remaining stocks less valuable. The price starts going down, and then all of the regular Americans, upon seeing the value of their shares plummet, they all start to sell too, to try to get what little money they can. So my guess is that Jay Cooke was working with JP Morgan, and both of those individuals may have sold their stock at the same time. all of the largest shareholders, the people that have the most money in these different banks or corporations, sell first. They get their money back. They make money off of that. But then the value of the stock drops and everybody else loses money. And everybody else is the American people and the regular investors. Then next in the documentary, it says JP Morgan knows that a run on one bank can quickly spread to others. And then he is contemplating this in his office, like he's just barely keeping up with all of this himself, instead of being one of the architects of this attack on the United States government and the people of the United States. So JP Morgan says, and I quote, "Cook failure showing signs of spread. Market poised to sustain damage. Calling in all loans as a precaution. Some disagreement among partners, but as senior, this is my decision. I am calling in all outstanding loans." And that is a telegraph or an announcement that he is making in the financial world. And then Dominic Chu says, he's the senior markets commentator at NBC. Calling in a loan is when banks say, hey, we want our money back. It's all about risk management from the lender's perspective. It's all about protecting their investment. And then the narrator states, against the wishes of his partners, JP Morgan calls in all the bank's loans, hoping to protect it before panic is unleashed. So that is a fancy way to state that JP Morgan was part of the run on the banks. He's the one who causes that. He wants all his money back. He's given out loans. He wants all his money back. That is a fancy way of saying that he was one of the first people to cash in his stocks. He loaned people like Jay Cook money by buying stock in his bank. And he wants that back. He wants his money back. He wants his loans back. So he cashes in his stocks. That's how he gets his money back, by cashing in his stock in Jay Cook's bank. So JP Morgan causes the runs on the banks, and they cause stock market crashes. They engineer all of this. It's the same scam over and over again. Only one bank emerges stronger than ever before, and that is the bank of JP Morgan, who of course started the runs on the banks by calling in all his loans or selling all of his stock first. So he is hailed as some sort of intelligent person, some sort of survivor by the creators of this documentary, when in fact he is the architect of that depression. Let me get the year of that depression. The Panic of 1873 is the worst the country has ever seen. And that was engineered by JP Morgan, his father, and all of his aristocrat banker friends from London. This was engineered by the English as a financial attack against the people of the United States. I quote, Titans, the rise of Wall Street. The Panic of 1873 is the worst the country has ever seen, causing the New York Stock Exchange to close for 10 days and leaving an apocalyptic economic landscape in its wake. Over 5,000 commercial banks and 57 stock exchange firms are dragged down, while over a quarter of the nation's railroads go belly up, which is always good news for JP Morgan because he gets to buy all of those railroads that go belly up. They all become very cheap to buy for people like JP Morgan and the English aristocrats. Okay, now they switch from JP Morgan to discuss the Vanderbilts. And they say Cornelius Vanderbilt was the richest self-made man in the world. He had done it first with steamboats and then with railroads. And when Cornelius Vanderbilt passes away in 1877, his son, William Vanderbilt, finds himself worth about $100 million and in control of the New York Central Railroad. So that's a good way of explaining that. One day William Vanderbilt wakes up and he finds himself worth about $100 million and in control of the New York Central Railroad. And all that took was for Cornelius Vanderbilt to have sex with his cousin and produce his little inbred offspring like William Vanderbilt. And one day little inbred William wakes up and he's worth $100 million and in control of the New York Central Railroad. That's not bad for a little inbred boy whose resume should include the statement, "My name is William Vanderbilt and I was produced through incest. And one day I woke up and I was worth $100 million and in control of the New York Central Railroad." This is what we're dealing with. And the same exact thing could be said about J.P. Morgan and J.P. Morgan's father and every person mentioned in Titans, The Rise of Wall Street. Okay, so it said that there was an investigation into William Vanderbilt. So William Vanderbilt approached J.P. Morgan and said that he wanted to sell his majority shares in the New York Railroad. And if he's a minority owner of the New York Railroad, that will stop the investigation into him. So J.P. Morgan goes to England and he sells the New York Railroad to English investors. And he makes $80 million in commissions. And he also sits on the board of directors for the New York Railroad. So that is what Vanderbilt, William Vanderbilt, and J.P. Morgan, and all of the aristocrats from England worked out. Because Vanderbilt, Cornelius Vanderbilt, is another agent of England. These are agents of England. They say that they are self-made men. They say Cornelius Vanderbilt made his money with steamboats, and then he bought the New York Railroad. In reality, these are all agents of England. These are all rich guys from England that come over to the United States, and they say that their last name is Morgan, or they say their last name is Vanderbilt, and that they are self-made men. When in reality, these are aristocrats from England and from Europe, who are from the most wealthy families in the world to begin with. And their job is to come over and take over America financially and cause great depressions and panics for everybody else. So my advice for everybody is do not invest in these people. Do not buy their stocks. The practice of the stock market, these practices like Wall Street and the stock market should be illegal. This is how these rich people destroy entire economies. And then when everybody else is bankrupt, they come in and buy everything up for almost nothing. They engineer all of this. It's the same scam over and over again. And what they will tell everybody is this: there are many stocks out there that are a sure investment. There are good investments out there. You just have to do your homework. You have to do your research and find out the sure investments. What companies or banks you could invest in wisely. Maybe you could get a subscription to these different financial magazines. Maybe you could employ these different Wall Street experts, these different stock traders that do this for a living, because they analyze the market and they'll tell you where to invest your money. But it is the same scam over and over and over again. This is the truth. If you want to invest in a company, if you really want to believe in a company, start your own company. Go work for a company. Go invest your time and your effort and your expertise and your knowledge and your hard work in a company. That is the only way you truly invest in a company. You start your own company. You work with people that you trust, who believe in your company, and they'll show you that they believe in your company by showing up to work every day, or investing their time and their energy, or they work for you. That is the only way you truly invest in a company. For everybody to say, I want to buy shares in a company, and then in 10 or 20 years from now, I want 100 times as much as I gave you 10 years ago. For the most part, this is a collective pipe dream. It's a collective delusion. Stock trading and Wall Street should be made illegal. This is what causes all of these Great Depressions. In the 1920s, everybody began borrowing money from banks and buying stocks, and that was called the Roaring Twenties. And soon after that was the Great Depression, where many people died. And this is all engineered by the very wealthy as an attack on everybody else. So it is the same scam over and over and over again. When you see these movies like Wall Street and Boiler Room, they always show the same thing. These stock traders, it's a giant call center. These firms show a giant room filled with telephones, filled with little cubicles, with people sitting at the desks with telephones. They're all on the telephone. Why is that? Because the only reason they are there is to call up people and try to get them to buy stock in their company. It's a scam. Those people aren't busy studying something. Those people aren't busy analyzing something. There are a bunch of young kids that are hired as salespeople. They're salesmen, and they're told to get on the phone and call a list of names of people who have bought stock from somewhere else. If you have purchased stock from them, your name goes on a list, and that list gets sold to another firm, to another criminal firm filled with scam artists that will try to convince you to buy another stock. That is the only thing that they are doing. They want to convince you to give them money and convince you that you are a investor or you own stock in their corrupt corporation. And then it's the same scam. The people that own the most shares, they sell all of their shares, making money. Everybody else who invested in their company, they lose all of the money that they invested in that company when the value of that stock goes to nothing. You give them money, they steal that money. The value of that stock goes down to nothing. So you gave them money for a stock, and then that stock became valueless. That is the only game they have. It is the same game over and over and over again. And then they'll tell you, no, those people did not have good financial advisors. They did not analyze the market well enough. They did not go with a reputable firm. They did not make safe investments. That is what they'll say. It is all a scam. It is a scam by monopoly banks and corporations to scam the American people out of more money. And they will use that system to eventually create another Wall Street crash and another Great Depression. This is an important line here. I quote, in 1873, there was no central authority in the government that had the ability to manipulate money supply or to provide support. Not like today, there was no central bank. So that suggests that today there is safety in our financial system because we have a central bank. There is in fact something like 12 English or London banking houses that all own the central bank in the United States. And today that central bank is called the Federal Reserve. So since the Federal Reserve was not around to manipulate the money like they are today, they weren't safe like we are today. So in the future, we're going to hear just how safe the American financial system is under the control of these central banks or under the control of the Federal Reserve Central Bank, which is owned by all the rich aristocrats from London. They are going to engineer another financial collapse. They are going to engineer another Great Depression in the United States and then shift what is called the reserve currency to China. They have what is called the yuan. It's the Chinese dollar. So the American dollar will be almost valueless. It will no longer be called the world's reserve currency. The dollar will lose all of its value. And what will take over is the Chinese yuan, that I think is on the gold standard now. It's back on the gold or silver standard. And of course, the Chinese are working with the aristocrats from England on shifting the power to the English-Chinese connection and their new currency, the yuan. But what they're doing in part 2, episode 2 of Titans of Wall Street, which is a series on Prime Video. So episode 2 focused on a guy named Jacob Schiff. That's spelled S-C-H-I-F-F. And he worked for the investment firm Kuhn, Loeb and Company. And they paint him as a young banker. He's a young, good-looking banker, as a self-made man who tries to take on J.P. Morgan, who was discussed in episode 1. So they say Jacob Schiff, he decided to buy the Union Pacific Railroad, which was a broken down railroad. They paint it as a broken down railroad that was serving no purpose. So here comes Jacob Schiff to the rescue, and he takes a risk and he buys the Union Pacific Railroad because it was just basically sitting there collecting dust, and he wants to rejuvenate it. And so he did that by borrowing money from Rockefeller. So it's a good thing that this self-made man here has connections to families like the Rockefellers that would just loan him money to buy these railroads that are serving no purpose. And then, since he buys that railroad line, the Union Pacific Railroad, he is therefore competing with J.P. Morgan's railroad called the Northern Pacific Railroad, because there can't be two transcontinental railroads. There can't be two railroads in the same part of the country. So of course that is nonsense due to the fact that they may be in the same area, but these are railroad lines. We have railroads all across the country. The more railroads going to more states and more cities, the better, because that means that they could transport people and products around to more areas. So they really can't be competing with each other too much if the overall goal is to try to get railroads all over the United States, because that was a major method of travel then, from the 1800s going into the 1900s. So this was around 1900. So they paint the picture that since these two railroads were in the same part of the country, Jacob Schiff had to go up against J.P. Morgan. So they said that both of those railroads would intersect with a well-established and larger railroad called the CBQ. And so J.P. Morgan bought all the stock in CBQ, and somehow that would throw off Schiff, Jacob Schiff's Union Pacific Railroad that had to intersect with the CBQ. And so that irritated Jacob Schiff, who went and approached J.P. Morgan and stated that this is a act of aggression. He said that J.P. Morgan was going out of his way to challenge or attack him by buying up all the shares in the CBQ Railroad, but they did not elaborate what that meant. What I think it means is that both of these parties, Jacob Schiff from Kuhn, Loeb and Company, and J.P. Morgan from J.P. Morgan and Company, both wanted monopoly control over all the railroads. So these were monopoly men. So the only reason they did not like it is because they both wanted monopoly control over the railroads. So another note that I have in here is that Jacob Schiff, they make him seem like he is a self-made man. He's a small business owner and he wants to buy the Union Pacific Railroad because basically it's not serving any purpose. And so he is something like a young business owner who wants to start a business. He wants to buy a railroad and then make something out of it where there was once basically nothing. So they're making him sound like he is the average American business owner. So what they're doing is they're merging the Jacob Schiff story with whoever was building these small railroads. So the Union Pacific Railroad was built somehow. They were built by railroad companies. They were built by people that built the Union Pacific Railroad. So a lot of these people were probably Americans, but you're not going to hear their name in the Titans of Wall Street. You're going to hear Jacob Schiff's name. So they're basically taking that unknown person's story who started and built the Union Pacific Railroad, and they're connecting it. They're giving all the credit to Jacob Schiff. They're merging those two stories, and they're cutting out the names of the people who were smaller business people, who were most likely Americans, who started these different railroad lines and then went bankrupt and were forced to shut down their operations, allowing people like Jacob Schiff the opportunity to come buy their bankrupt railroad. So the reason these railroads are bankrupt in the middle of the railroad boom is not because of poor management, but it's because they're under the attack of these giant investment firms like J.P. Morgan and Company and Kuhn, Loeb and Company, run by Jacob Schiff. They attack these smaller railroads or these independent railroads. They cause them to be bankrupt. They put the owners out of business, and then they buy these different railroads to form a railroad monopoly. They want a monopoly on all the different railroad lines all across the country. And then they want to tell you that Jacob Schiff is something like a self-made man who was rescuing these bankrupt railroads. And they're painting him as these Americans that built these railroads, that started these railroads. So they do the same thing with J.P. Morgan, who had basically bought 40 different railroads, and he put them in a railroad trust. It's a conglomerate. It's a huge monopoly. He took over 40 independent railroad lines, and he put it into a trust. And I think that meant that the government could not tax him so much money, and it was a way to hide these monopolies. And of course, do things on Wall Street concerning grouping all of these railroads together. So J.P. Morgan had taken over 40 independent railroads and put them in a railroad trust that he eventually got in trouble for. But after doing that, the quote from the documentary is that he then looked into the steel market and he saw that there were all these different independent steel companies that were, what's the word they used? Undeveloped, or they may use the word poorly managed or not centralized. They basically state that there were a series of different steel companies that he decided to buy next. And he created something called U.S. Steel. He created that. J.P. Morgan took all of these small steel companies that were poorly managed and not centralized. In other words, they were a series of independent businesses that had been built by people. These small steel companies, they built them out of nothing. They truly created these steel companies, and they were all independent steel companies. And then J.P. Morgan comes and he probably financially attacks them. He puts many into a state of bankruptcy using a series of scams and manipulation. And then he buys all these different steel companies. And then the documentary states that he created U.S. Steel, a large, strong steel company. So he did not create anything. J.P. Morgan did not create anything. A bunch of independent business people created these different steel companies, which they built out of nothing. They started from scratch, and they truly built these steel companies. They truly created these steel companies. J.P. Morgan just attacked them financially. He bankrupted a lot of them, and then he bought them, formed a monopoly, and then he's given credit for creating U.S. Steel. He just took over what had already been built. So we can't give these people too much credit, because what they're doing is using the stock market as a way to financially attack the U.S. economy. And then when these smaller or independent companies start to fail and go bankrupt, these monopoly men get to buy these companies for very cheap, and they buy all of them and form monopolies. So then the next thing that they cover in the documentary is that Jacob Schiff decides to come up with an idea on how to compete or attack JP Morgan, because JP Morgan had bought all the shares in the large CBQ railroad, which he needed to intersect his railroad with. Jacob Schiff's Union Pacific Railroad had to connect with the CBQ railroad, which JP Morgan had bought all the shares to. So Schiff came up with the brilliant idea that if JP Morgan is buying all the shares in the CBQ railroad, quite simply, Schiff would then buy all the shares in JP Morgan's railroad, his competitor. And JP Morgan's railroad was called Northern Pacific Railroad. So Jacob Schiff and Harriman, and most likely Rockefeller, began to buy all of the shares in JP Morgan's Northern Pacific Railroad. So at that time, JP Morgan was vacationing in France, they said. And JP Morgan got a telegram that told him that the value of the Northern Pacific Railroad shares were going up and up and up because everybody was buying the shares, or Schiff and Harriman were buying all of the shares. So it started at $5 a share, and it went all the way up to $70 a share. That's the example that they gave. It kept on going up and up and up. So Morgan was alerted that some interest was buying all the shares in his company. So he responded with a telegram to tell all of his investors to buy 150,000 shares at any price. And the documentary explained that the House of Morgan had unknowingly been selling shares to Jacob Schiff. So when you think about that, it's just a little silly. Jacob Schiff owns the Union Pacific Railroad. JP Morgan owns the Northern Pacific Railroad. Both railroads intersect with the CBQ Railroad, which JP Morgan has bought all the shares in. So to retaliate, Schiff decides to buy all the shares in JP Morgan's railroad, the Northern Pacific Railroad. So all of this is Wall Street manipulation. This is all stock market manipulation. If you think that all of these people are against each other, you're being scammed. All of these people are working together. All of these monopoly men are working together. They may act like they're at odds. They may act like they're against each other, but they are not. They always work together to manipulate the markets. This is part of their scam. They want to tell you that Jacob Schiff was going up against JP Morgan, but the truth is that they were working together to manipulate the market. So what is explained next in the documentary is a little bit unclear to me because I do not know the stock market so well. But what they said is that because the value of JP Morgan's Northern Pacific Railroad had gone up from like $5 a share to like $500 a share, what they had to do was begin to short the stock. They had to short the stock. And they gave an explanation of what that is, but it was a little bit unclear. It's something like buying insurance on different stocks. But for some reason, this stock going up in value began to throw off the whole stock market. And the whole stock market was affected because the Northern Pacific Railroad stock had gone up so high. They said that Jacob Schiff had bought at $70 a share, and now it was $1,000 a share. I don't know if that is the exact figures or that is like an example they are giving. That seems like a big win for Schiff because all Schiff would have to do at that point is just sell all of his shares. In the documentary, they act like Jacob Schiff, upon realizing that JP Morgan also began to buy all of the shares in his own railroad, inflating the worth of the stock at $1,000 a share. That meant trouble for Jacob Schiff. So if you were Jacob Schiff and you bought 50 or 100,000 shares at $70 each, and now they were valued at $1,000 each, all you would have to do is start selling your stock then, and you would make something like 10 times the amount that you bought the shares at. So it sounds like it would be a huge victory for Schiff, at least financially. So this is what these monopoly men do to manipulate the stock market. They inflate the worth of the stock, then they sell all of their stock first. They make all of that money, and then the value of the stock begins to plummet or go down. It's the same scam over and over again. It is not that complicated. When you begin to learn some of their terminology, it is not very complicated what they're doing. It takes very little to make money when you have tons of money. It takes very little to manipulate and scam and beat everybody else out of money using the stock market when you control the entire stock market, when you own most of the stocks. It's just a way to get smaller investors, regular people, to put money in the stock market, and then they steal it from them. It's like a casino that everybody goes to. The casino always makes all the money. The casino always takes everybody's money. You might win a little bit here at this card table. You might go to the craps table and win a little bit. But for some reason, the casinos stay in business because for the most part, they take everybody else's money. That's the only thing the stock market is, a casino. So then the documentary says that at that point, the American public began to catch on that there was no way to compete with these monopoly people in the stock market. It was set up for them to fail. It was a giant scam, and there was some bad press due to that. And there was also some riots, especially due to the economy being destabilized. And one example they gave was the Haymarket riots. That's an example that they gave. I think it started with a labor union dispute and protest, but that was one of the examples that they gave. So the big surprise was that J.P. Morgan and Jacob Schiff decided that they should work together. They were forced to work together to bail out the short sellers at only $150 a share. They had gone up way past that. They said $1,000 a share, but they were able to bail out the short sellers at only $150 a share. And that quieted the market down. And the short sellers suffered. But J.P. Morgan and Jacob Schiff managed to prevent a catastrophe. So let's give a round of applause for these creators like J.P. Morgan and Jacob Schiff, who managed to prevent a full-scale catastrophe. People suffered. The U.S. economy suffered. Many people lost money in the stock market. But due to the efforts and the ingenuity and the genius of J.P. Morgan and Jacob Schiff, they prevented a catastrophe. Isn't that great? A round of applause for these creators. So again, they made all the money after engineering this stock market scam. They worked together from the start to scam everybody else. And then they are praised as the people who could prevent a catastrophe. So then the last thing covered in the documentary was there were death threats to J.P. Morgan, and U.S. President William McKinley, who was a close personal friend of J.P. Morgan, was assassinated. So they do not elaborate on that at all. But after William McKinley was executed, President Roosevelt, Teddy Roosevelt, took his place, and he decided to take J.P. Morgan on in court. And they put in the media that J.P. Morgan's railroad conglomerate, his railroad monopoly called Northern Securities, was in fact a trust that controlled over 40 railroads that made up J.P. Morgan's transcontinental line. So President Roosevelt, Teddy Roosevelt, brought Morgan to court and forced him to disband the trusts and manage each railroad on its own, leading to a loss of profits. So he had to disband his trust and manage each railroad on its own. So the commentator, his name is Douglas Brinkley, he comments that the U.S. President Roosevelt is a little pipsqueak guy going up against J.P. Morgan and telling him that he has to break up his financial investment. So at that time, in 1902, U.S. presidents were not very powerful, but men like J.P. Morgan were. So it is very impressive to Douglas Brinkley that U.S. presidents like Roosevelt would not only bring J.P. Morgan to court, but force him to disband his trust. So that was what he described the U.S. president as, a little pipsqueak guy who dares challenge people like J.P. Morgan. So even if that is true, they are really letting you know who controls the United States. And these people think that the United States president, is a joke to even attempt to regulate people like J.P. Morgan. So the creators of this documentary are even telling you themselves that J.P. Morgan was the true president of the United States because he was in complete control of the economy. People like J.P. Morgan, Jacob Schiff, Rockefeller, and Harriman were the presidents of the United States. They were the people who were in control of the United States, and they look at U.S. presidents as little pipsqueaks who shouldn't even have the nerve to attempt to challenge them in court. They then report that J.P. Morgan realizes that he has to make a friend out of U.S. President Roosevelt. So he decides to approach him with his idea to buy the Panama Canal, which would help the United States with trade. The French had partially built a canal that ran through Panama so that ships could cut through Panama coming from South America to the U.S. But the French wanted too much money, and the United States government could not afford to buy the Panama Canal that had been partially constructed by the French government. So J.P. Morgan said that he would cover much of the cost if President Roosevelt wanted to partner up with J.P. Morgan in purchasing the Panama Canal. So number one, if these corporations wanted to improve their trade routes, the corporations could come up with their own money. They should not come to the United States people or the United States government to ask the taxpayers to pay for a Panama Canal that will help trade routes, unless the United States government and the citizens of the United States would also be owners of that and get tremendous amounts of profit from doing that. But then some people might bring up that the United States government should not use tax money and involve itself in these corporate enterprises, because that would be fascism, or the merger of corporations and the government. Basically, J.P. Morgan, I guess, was going to Roosevelt and saying to him, I could generate some money if you want to partner up with me in purchasing the Panama Canal, the partially built Panama Canal from the French government that you cannot afford on your own. But if you partner up with J.P. Morgan, then the United States government could then afford to purchase the Panama Canal. For whose use? What will be the major use of the Panama Canal? And they explain that as for corporations that ship goods from South America to the United States, among other reasons. So I'm sure these corporations will get rich, but the United States government, and of course the United States taxpayers, will not get rich. We'll just manage to go into more debt while these corporations grow more and more wealthy. So at the end of this episode, J.P. Morgan has convinced our hero, President Roosevelt, to come up with 40 billion in gold bars that will be sent to the French, is what J.P. Morgan says. And they show J.P. Morgan and his son standing on what looks like a pier. Maybe it's even a patio. And they have these wooden chests filled with gold bars, solid gold bars. And J.P. Morgan turns to his son and says, the transport will be here soon. And they're standing there with a dozen chests filled with solid gold bars. So I guess that these solid gold bars were given to J.P. Morgan by President Roosevelt. So if anybody who's interested in figuring out where all the American gold went, a joke is to say, where did all the gold in Fort Knox go to or disappear to? Supposedly, for every dollar that is printed up, that dollar should be redeemable for a certain amount of gold. That is what they mean when they say the gold standard. That keeps everything in balance. And that's what keeps the banks in check. What the banks have done is they have printed up more money than there is gold or silver or any value in the world. If these multi-billionaires were to take their money and just go buy things like property or gold or silver, everything in the world will be bought up, and they would still have giant mountains of cash money, of paper money. That is inflation. They are printing up more money than there is the world. That is what these greedy idiots like the sons of J.P. Morgan and Jacob Schiff are doing. And this is what has caused all the inflation. That is why everybody goes back to what is called the gold standard or the silver standard, which says that every dollar that is printed up represents something that is redeemable for a certain amount of real wealth. It has to represent something in reality. That is what that dollar meant. It is a promissory note. You could redeem this $1 for X amount of silver. That's what kept everything in balance. What threw everything off is these monopoly men and their manipulations of the United States economy, of finance, and the stock market. They are making so much money that the money is valueless. They have so much of it. Do you know how the Chinese receive United States money for everything they produce in China? All the stuff that they produce in their factories in China, they ship it over to the United States, and the United States pays them in US dollars. Do you know how much money they've accumulated in China for all the stuff, all the junk they produce in their factories? They are told, the Chinese, they are told by the English bankers, like the modern day J.P. Morgans and Jacob Schiffs, that they cannot spend that money because they'll throw off the whole economy. They have to hold on to that money, all the money that they've earned. They have to hold on to that US dollar. They are also not allowed to use that money to buy property, because real quick they would be able to buy the entire world with the money that they have. So their money just piles up and it is worthless. Essentially, it is worthless. They have printed up so much money that is valueless. What makes gold valuable? What makes a diamond valuable? Gold or diamonds are valuable because they are rare. A piece of artwork is valuable because it is rare. When they print up so much money that they have zillions and zillions of it, and they just print up more and more, eventually it becomes valueless. So right now, the English bankers are doing deals with the Chinese to set up a new currency called the yuan. It's the Chinese dollar. And the British, the English government is saying, for every $10,000 American dollars that you have, you could buy 1 yuan, but it will be backed by real gold. They are going to return to the gold standard, and that will be the new world's reserve currency, the yuan. The dollar is so inflated, it is considered worthless. So the English government wants to completely devalue the United States dollar, throw us into a depression, an economic collapse and a depression. They will turn America into a third world nation, and all the power will be shifted to England and their agents in China and their new world reserve currency called the yuan, which is on the gold standard. So if you wonder where all the gold went that was in Fort Knox back when we had the same deal with these English banks, around the year 1902, $40 billion worth of gold bars were handed by President Roosevelt to J.P. Morgan. And J.P. Morgan said that he was going to go take that and pay the French. Those bars of gold were brought to England, and the French were paid with more paper money because the English know the value of stuff like real gold, gold bars, gold bullion, silver, and artwork. What they also said in this documentary is that Morgan, J.P. Morgan, had gone to France to take the waters of France. I don't know if they meant to say take in the waters of France, but they said to take the waters of France by buying all types of artwork. Remember what real wealth is. Real wealth is businesses, independent businesses. Real wealth is your product, what you create, what you physically create. Real wealth is artwork, paintings. Real wealth is property, houses, land. Real wealth is physical. So these people who have gotten super rich, these monopoly men, these super wealthy men, they are wealthy with paper. They are wealthy in bank accounts. If you look at these monopoly men's bank account, some of them have $4 billion. $4 billion. But it's just something written on a piece of paper. That's all it is. It's just paper. And they made it that way because of their greed. Their greed made it valueless. If they kept their greed in check and they said, you know what, I'll settle with 4 million. 4 million that they could do whatever they want with. They would truly be rich. And a regular person would take that 4 million and they would go buy artwork, land, real items. But because of these rich people's greed, they wanted 4 billion in each of their bank accounts. And when the economy crashes, everybody's money will be valued nothing. But they planned to escape the same way they had again and again throughout history by being the first to cash in or cash out. And they're doing that now with China and the Chinese dollar called the yuan. So in episode 3 of Titans, The Rise of Wall Street, it starts with J.P. Morgan Jr., who they call Jack. And he is looking more and more like a J.P. Morgan clone. And he is wondering how he could expand on J.P. Morgan's corporation now that J.P. Morgan has basically taken over the entire U.S. economy through Wall Street. He is the secret controller of Wall Street. So as J.P. Morgan Jr., he doesn't really know how he could expand on J.P. Morgan's legacy. So that made me think of the board game, Monopoly. So after you win at Monopoly, what do? You declare Monopoly. You beat all the other players. What do? What do you do once you get Monopoly? So J.P. Morgan won at Monopoly. So what is his son to do? Now that his father has already won the game, what to do now? So the documentary leaves off with them and then focuses on a guy named Henry Goldman. Henry Goldman Jr. And he works for the firm Goldman & Sachs. So they explain it that he dropped out of Harvard and became a traveling salesman. And then after he was a traveling salesman for an undetermined amount of time, he was then able to join Goldman Sachs. So a traveler is a code word for a Freemason, because a big part of Freemasonry is to travel around the country, going to different areas where they have found a target city, a target business, a target family, or a target individual. And they all work together to destabilize that person, that business, or that state, or that city, and then take over. And this is what all of these tycoons of Wall Street, the super wealthy, have done to earn all of their money going back hundreds of years into ancient times. So after acting as a traveling salesman, he was then able to join Goldman Sachs. So the documentary explains it, and I quote the documentary, "Like many Jewish investment banks, in order to be a member of Goldman Sachs, you have to be part of their family. So Henry Goldman Jr. was the son of Henry Goldman, and the other manager over there, the other high-ranking director at Goldman Sachs, was a man named Samuel Sachs, who married Harry Goldman Sr.'s daughter. So I guess Samuel Sachs was the brother-in-law of Henry Goldman Jr., and they would argue a little bit because Samuel Sachs did not want to take any risky investments. All he wanted to do was run Goldman Sachs in a conservative manner. But Henry Goldman Jr., I quote the documentary, he wanted a piece of Wall Street. And there was a group of bankers, and the documentary explains them to be white Anglo-Saxon Protestant firms. And these white Anglo-Saxon Protestant firms are also described as the old guard. And they gave the example of J.P. Morgan, the J.P. Morgan Company, as one of these white Anglo-Saxon Protestant firms, or the old guard. So in order to break into that, Harry Goldman came up with the idea to take the retail company called Sears and Roebuck. Sears and Roebuck, or Sears. You might have a Sears in your area. They started off as a mail order company, and they had a catalog that people ordered out of, and then it would be delivered to their homes. And they had everything from furniture to appliances to clothes to jewelry, auto supplies, office supplies, sinks, etc. So they do not explain what happened to Sears and Roebuck, the people who started the company, Mr. Sears and Mr. Roebuck. All they state is that there was an owner or a co-owner named Julius Rosenwald, and he wanted to expand his company, Sears and Roebuck, and he wanted a $5 million loan to do so. However, Wall Street's old guard, Wall Street's biggest banks, were not interested in loaning money to Sears and Roebuck, or to Julius Rosenwald, rather. So Julius Rosenwald was forced to deal with the Jewish banking firm Goldman Sachs. So I think Goldman Sachs was one of the larger banks as well. So I think that they were very successful too. So I really do not know why they are explaining it as the Jewish banking firms were being somewhat persecuted by the white Anglo-Saxon banking firms. Because I think Goldman Sachs and J.P. Morgan basically went on to work together, much like J.P. Morgan and Jacob Schiff, who was also a Jewish banker. To say that there was some sort of competition between the two and that the Jewish banking firms were excluded is not exactly correct. They were always working together. So Sears and Roebuck were the first retail store to go public, or in other words, to sell shares of that retail store on the New York Stock Exchange. So I think, like many of their undertakings, they do a lot of advertising in newspapers. And I think that they said that they were going to sell shares of Sears and Roebuck starting at a cheap price per share, but said that it was destined to go up in value. So they wanted everybody to buy shares or invest in Sears and Roebuck on the New York Stock Exchange or on Wall Street. So on the first day of going public is what they call selling shares in a big corporation on Wall Street. They call that going public. The shares start off at $20 a share. And by the end of the day, the value was $40 a share. So instead of raising $5 million, this is how the documentary quotes it. So instead of raising $5 million, they were able to raise $40 million. So Sears took their cut of that, which was $5 million, I guess. They were promised $5 million, and they spent it on increased advertising, and they bought a larger building where they would have a larger distribution center where they focused on mail orders. They probably had a warehouse there, and then they would package up the orders and then ship them out. And they also focused on improving distribution. So I don't know what delivery companies they used. If they had their own delivery company, or if they used the United States Postal Service, or if there are other delivery companies back at that time. around 1900. So Sears was the first big retail store to go public. And after that, Goldman Sachs, along with probably the entire Wall Street, decided to take many retail companies public. And they gave the example of May Department Store, B.F. Goodrich, and Woolworths. And they state that these go IPO, which stands for public offering. They want the public to invest in their company by buying shares, of course. So then the documentary went on to discuss the company called Studebaker. And Studebaker made wagons or carts. Back in those days, most of the vehicles were horse-drawn wagons or carriages. And that's what Studebaker made. But around the late 1800s and early 1900s, they began to develop automobiles. And I was surprised to learn that Studebaker developed an electric battery-operated vehicle. That's what they say on this documentary, and I looked it up on the internet, and I guess indeed, according to the internet, they had electric cars for sale around 1900 that were powered by batteries, but they did not do so well. And I guess they were only purchased by the upper class. And they said around the year 1905, about 35,000 of these electric cars were registered in the United States. So there weren't a whole lot being sold. But Studebaker had received a loan from J.P. Morgan. I think it was a $5 million loan. And so he obviously owned a large part of the Studebaker company. And when they went to him to get more money, he refused to give them money. So instead, Henry Goldman decided to give them money, and he convinced them to go public. I think he used the newspapers. Henry Goldman used the newspapers to advertise that Studebaker would have traveling auto mechanics if something were to go wrong, because I guess one of the problems with Studebaker was that if the car broke, there were no mechanics garages back in those days to take them to. So what do you do with a broken down electric vehicle? Back in 1900, so they explained that Henry Goldman had the idea to fund Studebaker and advertise that they had traveling auto mechanics that could go all over the country to make sure that the cars were repaired properly. And then the documentary says that after Henry Goldman's hard work paid off, the next step was to go public and sell shares in Studebaker to raise money. So I really wouldn't say that putting an ad in a newspaper and loaning the Studebaker company some money amounted to a lot of hard work. But this is a constant theme in the documentary, which is to state that these bankers are just the hardest working entrepreneurs that you could find. They are truly titans, as is the name of their documentary. So it sounds like Henry Goldman placed a few articles in the newspaper advertising a warranty on Studebaker vehicles, and then he convinced Studebaker to go public by selling shares of their company to the public on the stock exchange on Wall Street, and the shares started at $20 a share and then went all the way up to $40 a share, and they were able to raise $43 million. So then the documentary switches to J.P. Morgan, and J.P. Morgan is very upset because he owned part of the Studebaker company, and they made it sound like he was recently informed by his son Jack Morgan, J.P. Morgan Jr., that Henry Goldman had invested in the company, they had gone public, and the cost of the shares had increased by 100%. The value of their shares had doubled. So J.P. Morgan is very upset with this. So the way I figure it, when he loaned them $5 million, J.P. Morgan owned about 1/8 of Studebaker. And when they went public and the value per share went up to $43 million, J.P. Morgan also doubled his money. So if he invested $5 million in Studebaker, he now had $10 million worth of shares. So it wasn't exactly a big defeat for J.P. Morgan, but they made it seem that way. And he is upset with his son for neglecting to see this happening ahead of time. So the way the documentary is presented, they continuously act like JP Morgan and people like Goldman Sachs. And in the episode before this one, Jacob Schiff really had nothing to do with each other. They just were continuously kind of forced to work together to earn these tremendous profits together. And besides that, they really had no dealings with each other. And they really did not like to work together because JP Morgan was part of the white Anglo-Saxon Protestant old guard of Wall Street. And Henry Goldman was part of the Jewish banking firm network. And those two groups really had nothing to do with each other. But they continuously were forced to work together and earn tremendous amounts of money together. So again, it's just misleading. The creators of this documentary are misleading you. Rich people will always work with rich people in the British-controlled banking system to take over the American economy. This was all England. This wasn't a single person named JP Morgan who was doing this all. JP Morgan was the front man for England, the English military, whatever they called the House of Lords back in 1900, whatever they called the network of aristocrats that own all the money in England. JP Morgan was their manager. He was their front man. And this was a financial attack. This was a financial takeover of America. You could say that they were always in control of America, but I disagree a little bit. Because a lot of people who are Americans worked very hard to build their corporations, like the steel mills, or these little railroads, or these little corporations that these giant bankers are always buying up in their monopoly trusts, in their monopoly conglomerates. They're always buying out these little guys after destabilizing them. These are American companies that are working very hard and then getting destabilized by these English banking firms like JP Morgan, Jacob Schiff, and Goldman Sachs, who all work together against Americans. That is the point of monopoly. They want to take over all of the smaller businesses, banks, and corporations in America. And then they declare monopoly. Then they have 100% control of our country. So then it switches to a guy named Charles Barney, who was the head of Knickerbocker Trust, which started at 11 million, and he increased the holdings, is how they phrase it. He increased their worth from 11 million to 65 million. And they showed Charles Barney in a small room smoking a cigarette or a cigar and drinking a glass of whiskey or scotch, much the same as JP Morgan. You see JP Morgan and JP Morgan's son always sipping a glass of whiskey or scotch. So the same thing with Charles Barney. He also likes to sit in a room and drink whiskey, only it's a small room. And so what this implies is that he is another front. You could call him an agent of chaos. His firm or his company is called Knickerbocker Trust. And he started with 11 million and now it's worth 65 million. So who wants to invest in Knickerbocker Trust? It's kind of a wild name. Charles Barney's Knickerbocker Trust. It attracts psychos. It attracts people who think that Knickerbocker sounds like a good horse to bet on in the horse race. Who are you betting on? Knickerbocker. Oh, that's a great name. Why'd you pick that horse? Oh, it was a great name. Knickerbocker. So it attracts people on Wall Street, investors, speculators, people who are suckers will invest in Knickerbocker and he will lose your money. So that is what Knickerbocker Trust did. He did a series of risky investments, and as one of the largest installations on Wall Street, if Knickerbocker Trust collapses, it could trigger a panic that could take the whole U.S. economy down. So Charles Barney then takes his biggest risk yet, and they say several unidentified people approach Barney, and their plan is to corner the copper market. So you could study that on your own, what it means to corner a market. It's a financial maneuver to rip everybody off, and they state that the gambit fails. Copper prices plummet 35 points in 2 hours, and panic sets in. So that was their plan all along. That was J.P. Morgan's boy, Charles Barney, sitting in a small room, like a bedroom, smoking a cigar, drinking a glass of scotch or whiskey, and running a trust called Knickerbocker Trust. He is an agent of chaos, and he did exactly what the plan was. Take the public's money. Take $65 million worth of the public's money. Start off with $11 million, and then take $55 million of the public's money, or the stock trader's money, make a series of risky investments, and then his stock would lose money. All of the rich investors would sell their shares in Knickerbocker Trust first, and then the value would go down, leaving everybody else with valueless stock. And so this creates panics. So the several unidentified people who approached Barney and suggested that he helped them corner the copper market were probably J.P. Morgan, Jacob Schiff, and Henry Goldman, just the network of English bankers. So due to them attempting to corner the copper market, panic sets in. There is a run on the bank. They're using that quite often, a run on the bank. It means everybody tries to sell their stock at once. They try to trade their stock in for US dollars, of course, and it sends the value of stocks tumbling down. So JP Morgan is shown sitting in his office stating that he is going to declare Knickerbocker as insolvent, and he is going to shut it down because JP Morgan was in control of the Knickerbocker Trust. And this guy, Charles Barney, was his employee. He worked for JP Morgan. He is an agent of JP Morgan. Barney is an agent of the British government. So they write that a run on Barney's bank becomes a run on all of the banks. And everybody begins to liquidate their holdings, which means sell their holdings. To liquidate something means to trade in what you have for money. If I liquidate my car, it means sell my car for money. If I liquidate my gun collection, my car, and my motorcycles, it means to trade them all in for money. It means to sell them all for money. It's a fancy way to say cash in their stocks for US dollars. So the narrator explains a run on the bank. He explains it as that everyone tries to fold their cards. So that is not a good way to say it, because in a poker game, if you were to fold, all that means is that you leave your money in the pot and you agree not to put any more money in the pot. You agree to fold or quit the game. You agree not to make any money on that card game, and you leave your money that you bet on the card game in the center of the table, and somebody else will win that money, of course. So that's not what it means for everybody to liquidate their holdings. What that means is that all of the card players would attempt to grab the money out of the pot. They're in a game. They bet money on the card game, and then they see that their cards are not very good, and they start grabbing at the money in the center of the table like a bunch of psychotic idiots. But that's all this Wall Street business is. It's a game for kids. These aren't titans. These aren't gods. These aren't financial wizards. They're a bunch of immature little kids that make their money manipulating people through financial scams. You work real hard to build a company. These jerks come along. They convince you to go public, sell your company off to shareholders, and then they bankrupt your company. They destroy the whole U.S. economy in this fashion. They liquidate it all. They take everything real and they liquidate it. These are very immature people. They're not hard workers. They're not intelligent. The last thing these people are is titans. So the stock exchange president, his name is Ransom Thomas. So that's just a name for a gangster. The New York Stock Exchange president, his name is Ransom. R-A-N-S-O-M, Ransom Thomas. He tries to close the market early to prevent everybody from selling off all of their shares. He thinks if he closes the market early, it will prevent all of the people from trying to cash in their shares that are dropping in value. So JP Morgan says to his people, I want you to summon Ransom Thomas. because JP Morgan is even in control of the New York Stock Exchange president, who gets summoned to JP Morgan. And JP Morgan commands Ransom Thomas that they will not close early. And then in a meeting with Wall Street's most prominent bankers, JP Morgan is able to raise $25 million in 15 minutes. And they do not explain that. So how is JP Morgan able to raise $25 million in 15 minutes? And that is, he sells a stock. He raises $25 million by selling something. And it takes him 15 minutes, and he corrects the problem of all the Wall Street investors liquidating their holdings all at once. They thought it would be another crash, another stock market crash. But JP Morgan saved the day again by raising $25 million in 15 minutes. And the quote from the documentary is, JP Morgan played the role of a central banker long before there was a central bank. So that says it all. JP Morgan was the central bank before the Federal Reserve came and acted as the central bank. JP Morgan, an agent of England, played the role of a central bank. So what's worse, JP Morgan or the Federal Reserve? And the answer is they're both the same, because JP Morgan probably took over as one of the directors of the Federal Reserve. They say that he killed himself, but he most likely changed his name and took over as the director of the Federal Reserve, or one of the chairmen of the Federal Reserve. So they said that even though that JP Morgan was able to raise $25 million in 15 minutes, there was still the panic of 1907, and he was able to prevent a full-scale stock market crash. But once the panic of 1907 was over, once the dust had cleared, Wall Street is back to business as usual, and America is hurting. End quote. Production is weighed down, and bankruptcies and unemployment are skyrocketing. That is another quote from Titans, The Rise of Wall Street. So this was all engineered by JP Morgan using the Knickerbocker Trust. Yet he is called the man of the hour and the hero of Wall Street in the newspapers. And they also write that he received a standing ovation on the floor of the New York Stock Exchange. So the truth is that he engineered all of this along with England to make a lot of money. And all that money came from the American people. And the American people lost their jobs when their businesses, when their employers were liquidated. All of this creates problems for the U.S. economy, and there are bankruptcies and unemployment. And all of that means more money to JP Morgan, because he liquidates the place where you're working. He shuts down the place where you are working, and he cashes it in for a lot of money, and you are left with no job and bankrupt. And if you take some of your money and invest in the stock market, you invest in one of their scams. You buy the shares. They might go up in value for a little while, but then they drop to nothing, and they take what you have invested in their corporation. They just take it from you. You invest money in their corporation. You bought shares in their company at $20 a share, and now they're worth $0 a share. So that money that you invested in their corporation is now gone because your stock has completely lost value. So in 1912, they say a special committee they say that a special committee was formed to investigate what is called the Money Trust, or JP Morgan's Money Trust. And it was called in the newspaper Uncle Sam's Trust Busters. And they even brought JP Morgan into court, into a court hearing, to put pressure on him. And the judge asked him, upon what basis do you decide to lend money? And JP Morgan says, I have faith in patriotism and the public spirit of the stock exchange. And the judge replied, you are not answering my question. Then he let that go and decided to ask another question. In how many industries do you wield significance? And that means in the different businesses, whether it be the steel mills or the railroads or Sears and Roebuck or the power company or the automobile manufacturing companies, and all these different companies where you control them through money, control them through loans, control them by having them go public, where JP Morgan controls them by owning most of the stocks in those different companies. And how many industries do you wield significant financial interest? And JP Morgan said, in none. So JP Morgan basically stonewalled the judge. So this was another U.S. government, I don't even know what to call it. So this was another U.S. government intervention on JP Morgan. The first one was Teddy Roosevelt. And I guess Teddy Roosevelt managed to give JP Morgan $65 million in gold bars in episode 2 of this documentary. President Teddy Roosevelt basically cleared out all of the gold in Fort Knox and handed it over to JP Morgan. That was the first guy that stood up to JP Morgan. So the second president to stand up to JP Morgan was Woodrow Wilson. So JP Morgan basically stonewalled them in court. And then he received a little bit of bad press. There was another cartoon of JP Morgan as a big fat banker with a wad of money in his pocket, holding money bags up. And it says something like Fat Cat Banker and Monopoly Trusts. So you basically see that the whole way through. The media acts as if they are against or exposing people like JP Morgan, when in fact JP Morgan controls all of the newspapers. That is another industry that JP Morgan controls, the press. So JP Morgan acts like this bad press is devastating. And he reads, JP Morgan is a fat cat banker. And he slams the newspaper down. And he slumps in his chair defeated. Nothing could be worse than this terrible political cartoon about fat cat JP Morgan. That really ruined his day. That is what they attempt to convince you of in this documentary. In reality, JP Morgan probably wrote those articles exposing himself. He probably controlled the people who were criticizing him in the newspaper. And they all came up with how they were going to expose him and how they were going to confront him in court with this idiot judge who in this documentary is shown asking 2 lame questions and then allowing himself to be stonewalled by JP Morgan. Of course, JP Morgan is beyond prosecution. He will not be arrested or charged with any crimes. He will just be asked a few questions in a court hearing. And he'll basically tell them, when asked, in how many industries do you wield significant financial interest? He'll say none. And then when asked who runs JP Morgan, he says, not me. So it's like talking to a big fat kid. Do you run JP Morgan? No. Are you mentally like 5 years old? The answer is yes. These people are mentally 5 years old. They're like little greedy babies. Even when they have monopoly control, they still don't stop there. They go around wrecking everything that they could wreck to place America into a state of economic collapse. One economic collapse after the next, after they control the entire U.S. economy. The only reason they take over, these aristocrats from England, is to torture and kill off the American people. That's the only reason why these people take over. They're not just greedy, they are ravenous. They take over so that they could take control of your lives, so that they could enslave you, to then torture you and kill you. And that is the God's honest truth. That is not a metaphor. I'm not speaking symbolically. I'm not exaggerating. They want to abduct you, torture you, and kill you in murder for entertainment. That is a big practice of these aristocrats. Murder shows. They love wars. They love torturing people to death. They like keeping everybody impoverished. They love attacking families. These people are ravenous, and they are all mentally like 5 years old. They're mentally very immature because they're raised in secret societies that are controlled by pedophiles. These pedophiles are Roman Catholic priests and Jewish rabbis that are involved in human trafficking and war and financial crimes, which all go hand in hand. People are livestock to them. The only thing they want to do is enslave people. And these people are mentally like 5 and 10 years old. When they're brought up in these secret societies that practice pedophilia, part of their mind freezes. Their emotional development freezes at a very young age. They do not develop mentally. Many of them are produced through incest. Much of the child abuse starts in their homes. They abuse their own children. And when their children grow older, their children conceive grandchildren through these incestuous relationships with the older members of these pedophile cults, these secret societies. So they're more like religious or military orders than they are real families. There are networks of pedophiles that raise their children as junior agents of the secret society, military order, or religious brotherhood. They function as a cult. They are into criminal pagan religious rites concerning murder and child abuse and rape. And they all make their money through organized crime, infiltration, infiltrating the business world, infiltrating the banking world. Then they put all of the real banks out of business. All the legitimate banks that want to do things the right way, the legal way, the sustainable way. Those banks are put out of business by these giant companies like JP Morgan. So JP Morgan was a frontman for the English aristocrats and the German aristocrats, European aristocrats. And these aristocrats are all Satanists who practice illegal pagan rites. So after all of these negative newspaper articles showing JP Morgan as a big fat banker holding up 2 money bags and saying JP Morgan is a monopoly man who controls the financial market through big trusts, all that bad press really took its toll on JP Morgan. And so JP Morgan ends up committing suicide, is what they say. So in 1913 was a big year for this satanic cult called the Illuminati, or the House of Lords, or the European aristocrats who are in the process of taking over America. The New York Stock Exchange Commission proposes a new idea to regulate the American economy. And that idea is the Federal Reserve. That is a central bank. So that was signed into law by President Woodrow Wilson. And that act gives 12 reserve banks ability to control the money supply to ensure economic stability. That is a quote from the documentary. So the Federal Reserve took the place of JP Morgan. The 16th Amendment was then ratified, and they instituted the income tax. Every person in America now had to pay an income tax. What is an income tax? Something like 20% of your salary you have to give to JP Morgan and the Federal Reserve. So this was the guy that supposedly was elected in the government to stand up to JP Morgan. JP Morgan's friends at the New York Stock Exchange Commission proposed the idea to come up with a Federal Reserve Central Bank, which is exactly what JP Morgan was acting as, his own shadowy secret central bank. So they said no more JP Morgan. Now we're going to have JP Morgan's Federal Reserve. They will do the same thing that JP Morgan was doing, only now you are going to give the Federal Reserve 20% of all your salaries. So even if you don't bet in the stock market, so even if you don't invest in the stock market, they are now forcing you, the New York Stock Exchange, the Federal Reserve is now forcing every American to give them 20% of their income every year. And they will take that money and they will invest that as they see fit on Wall Street. And you could bet that you're going to receive 0% back. You give them 20% of your salary and you get nothing back. So that's almost the same deal that their early investors got. Their early investors would say, I'll give you 20% of my income, I'll buy shares in your company, and then in a year or two, you could rip me off by saying the shares have completely lost its value. So every person in America does that now. They give these people at the Federal Reserve 20% of their salary. They invest in the Federal Reserve with 20% of their salary every year, and they get 0% of that back. They lose it all at the Federal Reserve. So that deal was set up by our good buddy Woodrow Wilson. So both Teddy Roosevelt and Woodrow Wilson were agents of England as well, were agents of these secret societies as well. None dare call it religion. These secret societies are religious based. These controllers of Wall Street are priests and rabbis and aristocrats. It's the same class. The aristocrats have royal titles, and they are also rabbis and priests. They come from the most wealthy families in Europe, and going back into ancient times, they have served a race of malevolent aliens called the Dracs or the Greys through human sacrifice and organized crime, through war, through infiltration, through silent invasions, through subversion. They do whatever they can to take over everything, infiltrate, subvert, and take over everything. So remember, their secret societies are religious based. They are kings, they are barons, they are princes, they are dukes, they are rabbis, they are priests, they are the House of Lords, they are the railroad magnates, they are the Wall Street tycoons, they are the Vanderbilts, they are the Rothschilds, they are the Rockefellers, they are the Bushes, they are the royal family of England, they are the Windsors, they are the DuPonts, they are the Collins, the Bundys, the Astors, the Mellons, the Carnegies, the Harrimans, the Schiffs, the Morgans, the Goldmans, the Sachs, and the Rosenwalds, who had taken over as a co-owner of Sears and Roebuck. So last in 1913, after getting the Federal Reserve placed in charge of the American economy, J.P. Morgan is said to commit suicide. So again, that is not true. That was a way to write him off. J.P. Morgan had a terrible end. He committed suicide, so he got what he deserved. In reality, he was placed in charge as a chairman of the Federal Reserve, or one of the chairmen at the 12 banks that make up the Federal Reserve Central Bank.